Paul, I'm glad you went there because it's switching over to a classic significant short cleansing in the U.S. contract. Now, Brent's up. Brent's running $91 a barrel, but WTI is caught up to Brent. It's almost the same price. Typically trades about a $5 discount. That's classic sign of get me out. I can't be short for the weekend. If something goes worse, I have a problem. But if this unprecedented event, which I did not expect the Strait of Hormuz to close, if it opens up, maybe by Monday, that's going to be a big problem because we've cleansed this market of shorts. The key thing to remember, though, is the U.S. is a massive net producer, net exporter of crude oil. So this actually benefits U.S. producers. It's the rest of the world, most notably China. China is the number one place where that Gulf oil goes, and they're kind of bottlenecked by Strait of Hormuz. But there's a pattern there. So for now, that's all that matters. But the bottom line is Strait of Hormuz is closed. If it stays closed, crude oil is strong. If it opens, crude oil is going to collapse.
Yeah, well, Mike, I mean, obviously the conversation around $100 oil back in play here. And, you know, a lot of questions about how that's going to impact the economy and markets. But what's your take? I mean, is it actually possible to see as much as $100 oil within the month, or is it still very much a tail risk sort of scenario?
Every bit that crude oil goes up like this enhances the potential for recession. That's the way it works. I just remember very clearly when the average price of gasoline got to $4 a gallon in 2008, that was a signal the recession was kicking in. But that's when crude oil peaked at 145. Now we're talking maybe it gets to 100 in the U.S. or Brent. So to me, that's what shifted. Back then, the U.S. was a massive net importer or massive net exporter. But what you saw in the data today, the bottom line for all these markets is we're seeing significant volatility in commodities, most notably energy and precious metals. It's very rare to have that kind of volatility without it trickling over to the stock market. So to me, that's the bottom line. If the volatility from commodities trickles over to the stock market, there's your recession.
So, Mike, is all this, I guess, war premium in the oil markets, will that come out dollar for dollar when this thing is over, or will there be some residual damage, I guess, and maybe a little bit higher prices?
Oh, I think it's going to make accelerate the bear market. So look what happened in natural gas this year. In January, on the year, the front natural gas future was up 100%. Now it's down 15%. It went to 7, now it's down to 3. To me, that's a guide what to expect in crude oil. It's getting near 100 in the front contract. That December contract, which will be front month when there's midterms, is running around 68. And by the time we get the midterms, if this is cleared up, it's probably running below 50 or lower, particularly if the stock market drops a little bit. So this is what accelerates the bear market. And the bottom line is the U.S. is a major glut of food and energy. In the past, we were a net importer, not of food, but of energy. That's how the world shifted.
Do you think people, traders, I guess, smart people that you know are, I don't know, lack of a better word, shorting oil right here?
Well, it's hard to short. You don't want to really look at the front contract as short. Maybe short further out, but I can almost guarantee you what the U.S. producers are saying is, oh boy, we can lock in profits for a year or two out at much higher prices and bring on more supply. Thank you very much. They've been waiting for that. That's what happened when Russia invaded Ukraine, particularly with all the grains. And they ended up bringing up too much supply. That's why they're in a bear market. Let's remember, this is a bear market bounce in crude oil. Prices go up. What's it going to do? Bring on more supply. Now, the Gulf is a different story. You have to cut off that supply for a long time. I doubt that's going to happen.